Hi everyone, welcome to Thursday where we take a look at a share and review. This week I've had a request to take a look at Contact Energy. So before I jump across and share my screen, the usual housekeeping, and that is that this is for educational purposes only, certainly not intended to be personalised financial advice for anybody. If you're looking for personalised financial advice, then you do need to go and have a chat to your own personal financial advisor. And just before I do jump across, I've been mentioning it for the last couple of weeks. I'm looking at running a free course on learning to invest. So it is a very elementary course on investing, certainly not going to be covering the scope of what I talk about in these videos. It's really just giving you an understanding of different types of investments that are available and perhaps where you can start to have a look. So let me know in the comments, and then if there's enough interest, then I will definitely look to get something up and running. And also, if you are interested, just drop me a line and let me know specifically what you'd like to learn, because I want to make this valuable for people. I don't want to be wasting your time or mine by providing information that is missing the mark. So let me know, and we'll see what we can do. Now let's just take a look at Contact Energy. Right, I've got Contact Energy up here on the screen, and you can really sort of see that Contact Energy has almost been a little bit range bound, sort of around that $8.58 mark, and to about sort of that $7.08 mark. You can see, and I've left it zoomed out at the moment because it's hit this $8.60. Now, why I feel that is a line of significance, if you like, is because if I go back further, go around this period here, which was May 21 through to about October 21, you can see that Contact Energy kept hitting a relative high point at around that $8.60, which means when a share is trying to rise, that becomes a line of resistance, which can be a good thing if it keeps hitting it, because if it eventually breaks through, which we saw here, because it touched it again in August 23, and then it touched it a few more times around March last year, 24, and then all of a sudden it broke through back in April last year, which is great. Now we had a bit of a rally, and obviously it came back, and it came back through that moving average, through that line of resistance, and it broke it, and then it started to go on again. Now it hit that high point of around sort of $9.60, and that was in December last year. Since then, you can see that Contact Energy has been basically in free fall, and there have only been really 3 positive weeks since the start of this year for Contact Energy. Now, it's where it's currently sitting is now so that line of resistance has now become what we refer to as support. Now, the thing that obviously no one knows is this going to be where it sort of hovers again before it goes up, or is that going to break through that line of support and continue down? I don't know. But this is where you need to have an exit point made already predetermined, which I will cover in a minute as some ideas. One thing that I do want to show is you can see by this large red candle here, there was a lot of buying at that particular time, and that was before the share went ex-dividend. So Contact Energy, I think they do pay a relatively good dividend, and sometimes you'll find investors will buy that share in order to hold it. It may only be for a day before it goes ex-dividend, which means if you hold it the following day, you don't receive the dividend. If you hold it the day prior, you will. So what we can sometimes see, or quite regularly see, is that a market will sell off once it goes ex-dividend. So that could be a reason why we've seen that. And you can see that here. It went ex-dividend back in August last year, and we saw a bit of a sell-off before it rallied again. And the dividend here is 16 cents. So that's quite a reasonable dividend. So that's 16 cents per share that you own. So that could be a reason for it. But bearing in mind, we're actually seeing as well a number of shares we're seeing the main board of the New Zealand Stock Exchange also falling. So this could also be a victim of what is potentially happening globally. I mean, the States, there's been a lot of noise around the States and their markets, and I do follow the US market, and that too has been falling. The NASDAQ especially has been hit very, very hard. Okay, but there are other countries and markets around the world that are performing quite well. There's the German, the China, and even there's some of the Euro markets are performing well. So whether we're just a victim of that, I don't know. To me, it's all about what the charts are saying. Now let's just put our moving averages on, and we'll start off with the 30-week moving exponential moving average. Now, as you can see here, Contact Energy has fallen below that 30-week moving average. So we've had last week where it closed, and this week it has opened, or the one day of trading, so I'm recording this on Tuesday, it is down for the week already. Okay, so that potentially is a negative. Now let's also put on another moving average, and we will put on the 15, because I like to see how the two are obviously working in conjunction with one another. Right. So you can see here that 15-week moving average is starting to trend down, and it hasn't crossed through the 30-week. I mean, it could get close, like it has in other periods. You can see back here, back in April 23, it got very close, and then it rallied again. Okay. Closed down below those moving averages in November 23, stayed sort of down, and then it crossed and went on for another run. And you sort of see that quite a bit. So to me, when that 15-week moving average crosses through the 30, could be a good time to sell this particular share. If I look at the performance of Contact Energy, over the last month, it has been down 6.01%. If I look at it the last 6 months, it's actually been positive of 4.62%. Year to date, and you can just see this clearly on this chart, that it is down 9.47%. The overall 12-month return on Contact Energy is 2.99, and over the last 5 years, it's had a 45.3 cents, or 45.03% return for the last 5 years, which averages about a 9% return, which is a very, very strong return. However, because this is an individual share, anything could affect it. Okay, so you need to determine what is going to be your exit point. Now, for me, when I look buying a share, and because this has been in a good uptrend, so for me, by having stop losses takes all the emotion out of when am I going to sell a share. So let's say I've ridden it all through this sort of period, and let's take this figure here of $9.67. I'm going to use the 21 period of the ATR. That's the average trading range of a share. I always predetermine where my stop is going to be. And so by using, that's when I enter into the share. By using the ATR, which is the average trading range, that's basically the average movement that you could see in this particular share on a weekly basis. Now, it has moved up to 40. So what I would do is I will take that 40.4, I times it by 4, which gives me 1.6. Now, let's say I'd been holding this share for some time. It reached a high point here at the end of December last year, and let's just say that it closed at $9.67. So I'll take my $9.67, which means I would immediately put a stop on this particular share at $8.07. So that will stay in place until two reasons: until it's either hit, if the share continues down and it hits that $8.07, or if it turns around and starts going back up again. Okay, and then if it gets above that $9.67, then I will work out where my stop loss needs to be. So that's taking the ATR, timesing it by 4, and then taking that figure away from the high point of the share. So that's a couple of different methodologies, if you like, you could use in order to know when to get out of a share. For me, by having these predetermined figures in place, takes the emotion out of going, oh my gosh, is it going to recover? Oh, it's been a good share. It's going to continue. It'll come right. Takes all of those emotions out. I like the fact that it's very, very binary. And by automatically having that stop in place means I can be continuing on with whatever I'm doing throughout my day. And I'll just receive a notification from my broker saying that this particular share has been sold. And hey, hopefully the idea is for it to have been sold in a profit. And remember as well that just because you're stopped out of a share and because it's hit your exit figure, it's not binary. You can wait until a share recovers again and starts showing that upward momentum and enter back in. Because the thing with the share trading is that it doesn't care who you are or what you're doing, but what you want to do is basically, in my view, follow the trend. I never try to be counterintuitive when I do my investing. If a share is rising and it meets certain criteria that I've explained before, then I will look to enter into that share. But until then, I want to make sure that my capital is protected and hopefully a profit is locked in. So I hope that's helped. I mean, I've covered off quite a bit. Another thing, actually, just before I wrap it up, you could also perhaps consider saying, okay, if it hit that high point there of $9.67, you might want to use a percentage base figure. Now, I don't tend to use 10%. It's something I have tried years ago when I was first getting into investing. So I tend to make sure it's a little bit wider. So if it's say $9.67, let's make it 20%. So that would take it down to say $7.73, $7.74 as a 20%. But at the end of the day, you've got to be comfortable as to where that share you want to exit that share, and make sure that you've got it written down, and hopefully if you're using a broker you can put that into the market with your broker. Even if you're using an online platform, I use online platforms all the time as my brokers, and it means that I can just with no emotion go in and load that stop loss, and like I said, the market will automatically take me out if it hits that. If it doesn't and the share keeps running, hey, that's my bonus. So I hope that's helped. If you do need any more explanation on that, reach out, here to help, and we can even tee up a meeting if you like, and we can go through it together. So yeah, let me know. Okay, take care.